For more on whether this buy the dip mentality will pay off, we're joined right now by J.J. Kinahan, who's Chief Market Strategist at TD Ameritrade, and Margie Patel, who's Senior Portfolio Manager for the Multi-Asset Solutions team at Wells Fargo Asset Management. J.J., let's start with you. Buying the dip here, is that the retail investor who's doing that? Is that the institutional investor, or is it both?
Well, given the velocity that we've come up off the last few days, I would think it would have to be both. I don't think the retail investor alone could have driven us this much to the upside. What's interesting is, again, if I look at some of the stocks, you know, I've talked before about, it's usually Apple and Microsoft that our retail clients tend to start with in terms of the buy the dip mentality. This time, Apple, again, was one of the primary, as was Tesla, which, you know, are two stocks along with Microsoft where people tend to turn. What was interesting is a couple of the other stocks that people bought on this dip this time, and that being AMD and NVIDIA, which aren't necessarily two of the stocks that you necessarily see, and maybe a little bit of a strange place to start. But they were two of the other stocks that people went for. So it'll be interesting now to watch the chip sector, et cetera, going forward based on that kind of activity. But, you know, I think the one thing I would say to people...
Chip shortage, do you think, JJ?
Probably, Becky, and there's been a lot of, up movement in that space over the last month and a half anyway. Mm-hmm. So I think people were maybe looking for some bargains there, and I think you're hitting on something with the chip shortage. But the one thing I would warn people, this Evergrande story, these things don't go away after one day. We saw one really big day move on it. They tend to come back and, you know, first weekly, then maybe monthly. I mean, let's face it. Brexit could come back any day. It's still out there. For a while, it was all we talked about. So these kind of stories, as I tell people, for the first few weeks particularly, you have to be very careful that this may just pop up its head and we have, the bottom drop out one day suddenly. And for the first 2 weeks after a story like that breaks, really you have to tread with caution, in my opinion.
You're like me. Every time I see Evergrande, I want to say Evergrande, not just because of the Starbucks coffee cups, but also because of Ariana Grande. like change the spelling already. That's driving me nuts. Margie, let's talk a little bit about the 5 to 10% correction that investors keep waiting for. We keep hearing that this is going to be here. Are we waiting for Godot?
Yes, I think so. I think fundamentals of the U.S. economy are just too good, and the Fed is being too accommodative to really even 5% looks kind of a push. We have little feints here and there, and then the market comes back. Too many people are bargain hunters, and they're expecting a 15% correction. When that happens, they're going to pile in. They're expecting interest rates to push way up. Then they're going to jump in and buy bonds. So as a result, that says to me there's too much money on the sidelines. So we never really get that correction.
Let me ask you just about some of the things we've seen this week in the headlines. Margie, we were talking earlier about Nike and the concerns they have about labor costs, supply chain issues. It's the same story we heard from FedEx earlier this week. We've heard it from the home builders and a lot of other places. And that has some people nervous that this earnings season is going to be a disappointment because there are a lot of higher margin issues and a lot of sourcing issues that are inevitably going to show up in these results.
Yes, and we've seen that already. Some companies are actually pre-announcing and talking about that, both of those factors. And that's one of the concerns in the marketplace is will companies be able to maintain these record profit margins that they've enjoyed? So when they get even a small lift in revenue, they have terrific profits. And we think the market is going to look through these temporary issues, temporary push-ups, say, from supply, and look more at the bigger picture, what's happening to sales. Nike's a great example where, yes, they had these other push-pulls in supply chains, but also, frankly, the demand was a little soft. So we think we'll see that more separating in the third quarter, those companies that maintain margins or that can look through the margins because they still have good fundamental growth.
JJ, how big of an impact did the Fed decision have on retail investors? Is it something they're watching, or are they looking much more closely at individual companies' results?
Well, I think everybody has to be watching what the Fed's doing right now. As you know, we've seen this bigger movement toward individual equities in terms of what people are buying. But overall, the Fed is still the overlooming story in terms of the whole market. I think you saw the power of it because Evergrande being the big story, Monday, by Wednesday, the Fed had kind of overruled that, if you will, in terms of everything that they said leading to this incredible rally. So the Fed has to be the number one thing that everybody is watching because we saw how quickly anything they say can light the match to the upside, or actually I think, had they said some other things, kind of put a real damper on the market and continue that downward spiral. So again, they may not necessarily be trading index products based on what the Fed is saying, but everybody has to watch what the Fed is saying, just because, the rising tide lifting all boats, and then make a decision as to which one of those rising boats, if you will, is going to be the ones that go the highest. And we saw that in some of the stocks that they bought this week.
JJ, Margie, thank you to both of you this morning, and have a great weekend.
Thanks, Beck.